Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I am Yatin, Mota.
Well, another day of consolidation on the last street, given the fact that the Nifty managed to end below that 19,700 mark. However, we did end the day in the green, after slipping below that 19,650 mark as well. Mid and small caps continue to outperform. They ended the day in the green. Among the sectoral movers, you had the likes of the metal pack, autos, as well as pharma. Among top gainers, of course, you had Tata Steel clocking in a smart rally, and that really pushed the metal index up by 3% or thereabouts. Among the other nifty gainers, you had Hindalco, JSW Steel, NTPC, Tata Motors ahead of its earnings. On the losing front, you had Asian Paints. Numbers were mixed. We'll be talking about that in greater details in a bit. But ITC extending losses after the nod for demerger of its hotel business. Britannia, IndusInd Bank, SBI and L&T ahead of numbers in the red. ITC, of course, extended its slide after the demerger nod from the board. Tata Motors, of course, expected to report a strong set of numbers on the back of strength in JLR margins. Remember, JLR volumes have, of course, been pretty strong. That they have been trickling in from the start of this month, and they have been pretty healthy. Aside of that, L&T subdued ahead of first quarter numbers. Margins are likely to be healthy. Of course, the key to watch will be the share buyback that the board will be considering. It will be, of course, its first ever buyback after attempting a buyback back in 2018. TVS Motors was another one that surged on the back of strong earnings, margins above 10% for the 7th straight quarter. In fact, margins at record highs. From the mid-cap end of the markets, Yatin, lots of movers and shakers when it comes to the earnings reactions, right?
So, a lot of movers and shakers, and if you look at specifically Jyoti Laboratories, that was the stock of the day, 20% up after they reported more than doubling of their EBITDA. Also, Adani Group stocks were moving in trade. In fact, we had Adani Green, Adani Power, Adani Transmission being the top gainers on Nifty 500, moving by anywhere between 8 to 10%. Apart from that, Thermax reacted to the earnings, 7% up for that one. However, what was not doing well in the market was Olectra after the government scrapped the BYD plans to set up a battery unit in India. That stock was down 10% after a correction of similar levels a few days back. DCM Shriram as well as Mahindra Logistics, these are the two stocks which reacted adversely to the quarterly earnings because they were weak in nature. In fact, Mahindra Logistics reported a loss post which the stock saw almost 6% decline coming in. Jindal Steel, GSPL, Ajanta Pharma, TVS Motors were the other F&O counters which were doing quite well in trade. But Nandita, what are the stocks you are focusing on?
Well, Yatin, starting with Asian Paints, of course, mixed set of numbers. Profits up 50% or thereabouts on a YY basis, mild beat, but it was the revenues that disappointed, when it comes to Asian Paints. Margins, of course, have expanded. If you look at gross margins, they have expanded by over 500 basis points vis-a-vis expectation of 400 basis points. So that was a good thing. EBITDA margin coming in at 23.1% vis-a-vis 18% on a YY basis. Domestic decorative business, it clocked in healthy double-digit margins. That's one factor that was being watched out for. So no disappointments there. But when it looks when you look at the risk factors, it's the rising crude prices. Crude prices now are at a 3-month high. That is one risk factor going ahead for Asian Paints. In fact, most of the paint companies, of course, there's a threat of rising competition given the fact that Grasim, of course, will be making its entry in the paints business. They are looking to be this number 2 player, even though with the might that Aditya Birla Group has. I mean, of course, there is that threat of competition that is looming large over some of these paint companies, and of course, Asian Paints is one of them. If you look at some of the disappointments in this quarter, as I was mentioning, revenues were a miss, but international revenues were also a miss given the fact that there were macro uncertainties, there was forex tightness that also impacted key Asian markets when it comes to international markets. If you look at the stock performance, it has run up quite a bit. It is near record highs, even though today it was a laggard, trading at 66 times forward PE ratio, which is obviously expensive when it comes to its peers. And if you look at return ratios, they have been healthy, 26% ROE over the last 5 years or thereabouts. All in all, earnings not a major disappointment, but revenue front, it was a disappointment given the fact that internationally as well there was some bit of macro uncertainty emerging, and of course we'll have to watch out for the risk factors that I mentioned, crude prices as well as the threat of rising competition.
Absolutely, Nandita, and Asian Paints stock, cracked in trade. Probably, there is some profit taking which is happening at higher levels, and more importantly, crude oil prices also have been rising in the near term. Probably, the kind of margin performance we are seeing could not be repetitive in nature, or probably the management needs to give some clarity on that one. But the stock on my radar is Tata Steel today. CLSA has an outperformer rating on this steel company with a target of 125 now. Obviously, exceptional items this time boosted the profits for Tata Steel. But if you look at the standalone EBITDA, that was almost at 14,000 rupees per ton, broadly better than what the street was expecting. Also, if you look at the Europe profitability, that has been a laggard, but probably already in the price. As far as net debt is concerned, that increased slightly by 3,600 crores according to the CLSA note. Now, obviously, we know that steel prices has been quite weak in the past few weeks, but given the fact that China's stimulus has been doing works for the real estate industry in the Chinese market, obviously, there the metal prices have surged. In fact, if you look at all the commodities, they have been doing well in the short term, probably because China will provide some bit of support to falling base metal prices and steel prices. So, the anticipation from here is that there could be incremental improvement in demand of steel, as well as China's stimulus will keep the prices slightly buoyant in the short to medium term, and probably that is the reason why the stock of Tata Steel did what it did today, almost up by 2-3% last time I checked, and almost closing near the day's high.
Well, Tata Steel, of course, shining bright, given the fact that, of course, profit expectations were somewhere around 160 crores or thereabouts, and they have handed in a profit figure at 560 crores or thereabouts. So that's a beat on that front, even though they have, the profit has dipped or whatever, slumped by 93% on a YY basis. But the next stock on my radar is Bajaj Auto. Numbers were kind of a disappointment, given the fact that, we saw net profit jumping 41%, but they were below estimates, and even revenue was below estimates, even though they have grown somewhere around 29% on a YY basis. Margins, however, came in at, somewhere around 19%. That was largely in line with expectations. It has recorded its highest ever quarterly EBITDA at 1954 crores. That was one a good takeaway from the earnings. Although operationally you could call it a strong quarter for Bajaj Auto. The company has added 2,000 crore of free cash flow in this quarter. In fact, double-digit volume growth and improving exports. That is one point to note, that the exports have improved, if not on a YY basis, on a quarter-on-quarter basis, and that has aided the operational performance in the first quarter. If you look at the stock, Yatin, of course, stock is up 30% in the last 6 months. Of course, we know that auto index has outperformed the benchmark Nifty index by leaps and bounds, given the fact that auto index has surged 24% on a YTD basis vis-a-vis the Nifty gains of 8% or thereabouts. If you look at the trailing PE of the stock, it's somewhere around 22.7, which is lower than the sector PE. So even though auto stocks have become expensive, looks like Bajaj Auto may be one cheap alternative in this pack. And if you look at the return on equity over the last 5 years, it has given over 20% return. So that way also it is pretty healthy. So all in all, performance operationally strong, and of course we know that it has entered the premium bike segment competition with Bajaj Triumph. So we'll have to see how it manages to gain market share going forward vis-a-vis competitors like Eicher as well as Hero.
Yeah, and that will be one space we need to watch out for. But obviously, Bajaj Auto is the story of a one two-wheeler which is into premium motorcycles, but the other stock on focus is TVS Motors, largely because the electric vehicle segment business is doing well for the company. In fact, Jefferies has a buy rating on this one with a target of 1550. The shares surged as much as 6% intraday on the anticipation that there could be some further market share gains in the electric vehicle segment. Now, Jefferies believes that the EBITDA and recurring PAT grew by nearly 27 to 40% respectively. However, if you look at the EBITDA margins, not only the margin expanded, but the per vehicle contribution also improved drastically for TVS Motors. Now, if you look at the electric vehicle segment, it is a key beneficiary, and despite the fact that the company has done away with the FAME to subsidiary regime, there could be some pressure in the electric vehicle business, but on a consolidated basis, there was some decent margin beat. Clearly, this shows that there is some further tailwind to the margins moving ahead. And according to Jefferies, we could see a 39% compounded annual growth rate in earnings for TVS Motors till FY25. So, on the back of strong earning expectations and margin expansion or margin sustainability at current levels, brokerages have been quite bullish on the stock of TVS Motors.
Right, you talk about TVS Motors. Tata Motors has just reported its earnings. In fact, 42% jump in revenues on a YY basis, and in fact, it has posted a profit of 3,000 crore rupees or thereabouts, vis-a-vis a loss a year ago. In fact, JLR EBIT margin is 8.6%. Up 1300 basis points on a YY basis. Looks like a beat, I mean, on the face of it, but looks like the numbers are pretty healthy. Of course, we will be getting you details on that later in the day. Stay tuned to moneycontrol.com for all the details on Tata Motors first quarter performance. But of course, the stock will be reacting to it in tomorrow's trading session. But for now, I think we are done with our stocks that were on our radar. But of course, I'll be back with the markets tomorrow morning at 8:30 a.m. So don't forget to tune in to morning trade. But if you have any comments, leave them in the comment section below. And from Yatin and me, thanks a lot for watching. Stay tuned to Money Control for all your news and financial updates.